Okay, before we get started, quick request, and I'm sure it came out last night. As part of the Q&A session, please wait for the microphone, since we're recording everything and want to make sure we accurately record your question. Fair enough? Good? Start again. Good morning, everyone. Good morning. Hey, glad you're here, and glad I'm here. My name is Gordon Deal. I host a radio program called the Wall Street Journal this morning. It's heard here locally in Savannah on WTKS 1290 at 5 a.m. You're all entrepreneurs, small business owners, I'm sure you're early risers. So my cousin B here at the Creative Coast got me to come down here, and I was thinking how this was the typical entrepreneurial request when she called, because she said, I'm putting together a conference called Geekend, and I need you here, and hung up the phone. So I didn't know when it was, where it was being held, who was involved, or what I was doing. And I thought, that typifies it, right? And listening to the professor before, he made the point like, hey, why can't we just go build it? Right? And I thought as part of what I do for the Wall Street Journal, I'm responsible for a weekly small business podcast. So I get to talk to these geniuses like yourselves on a weekly basis who have all these great ideas, who are not afraid to act on them. And that's kind of the spirit I really love of the small business owner, of the entrepreneur. Like B, who just said, I need you here. Like, we'll figure out the details later. Just give me the yeah, click, right? That's kind of how it went down. So I've always been, I'm not a small business owner myself. I've never been called a geek. So it's really fun to be here. So thanks for doing it. So we have this money panel. We have these gentlemen here, and I think we just want to talk about how can we get their money, right? Or if not their money, people in their arena, right? Because we have the great ideas, sometimes we need the funding for it. So we'll start with Ralph. We'll do a quick introduction as the elevator pitch, as we often say, right? In developing your small business, how fast can you get that pitch out there? So we'll start with Ralph, and then we'll do some Q&A. We got 45 minutes, so it's my responsibility to make this really efficient. And I'll throw out some subjects on the way that I would like addressed, even though I'm not an entrepreneur or a startup guy. But I'm good at asking dumb questions and sometimes some insightful ones. So Ralph, start us.
Okay, good morning. I think we're 15 minutes in, so we'll keep this short. Ralph Montgomery, I work for an advisory firm, FourBridges Capital Advisors in Atlanta and Chattanooga. We work with a lot of small and medium-sized businesses to really do one of two things. We work with companies that are one of two inflection points, trying to raise more institutional capital for the first time, or they're at the other end of the spectrum where they're ready to cash in, and it's more of a sales scenario.
Hey, Jason Premo. I'm actually born here in Georgia, Warner Robins, a Georgia Tech Yellow Jacket. Accidental entrepreneur, started in Fortune 500 and got recruited into private equity, and then got into my own entrepreneurial experiences. Almost bankrupt twice. So there's a lot of interesting stories there that most entrepreneurs can relate to. Aerospace manufacturing guy and a supplier to Boeing. Most recently started a venture capital firm that's mainly focused in growing advanced manufacturing platforms here throughout the Southeast, and also do angel and early stage investing on the side.
My name is Elton Rivas, and I am an entrepreneur, very passionate one at that. Corporate refugee as well. Left the corporate world in kind of my late 20s, and over the past few years have been really focused on trying to build a better ecosystem in Jacksonville. And I guess one of the reasons that I was here is that we got really frustrated in our community with the way that capital paths were working or not working, and so we started something called One Spark, which is the world's crowdfunding festival, and we think potentially a better way to get capital connected with ideas and vice versa. So that's our story.
Very good. All right, so we got a feel for some traditional and what we might call non-traditional sources. So quickly then, in 15 seconds, what is the lending environment right now for somebody who needs capital? Ralph, good, bad?
Well, depending on where you are on the spectrum, I mean, obviously for more mature companies, it's very good right now. There's a lot of capital out there. There's people competing to put that capital to work. The caveat is the pain of the last recession, this post-recession environment is not that far away. It still lurks underneath the surface, so people aren't being silly with their money, but there is a very good, competitive, robust environment out there for lending money.
Is it too tight right now, Jason? Is the environment too tight?
It's too tight depending on how big your company is. So if you are less than really a bare minimum, less than $1 million in EBITDA, earnings before interest, taxes, depreciation, amortization. It's a mouthful. If you're less than $1 million in EBITDA, really nobody's going to give you the time of day. A traditional equity fund, they need to move more money than that, and most companies are sold or bought for multiples of their EBITDA. So if you are out of the garage and you have some seed funding, there's some sources for that depending on really your network and the energy in the local community. So there are some good sources for seeds funding and angel investing, but as soon as you get out of the garage and you have 5, 8, 10 employees, you're in the dead zone. So when you're too big for angel and too small for VCs, you're in the valley of death.
Interesting. Sounds like there's a small business opportunity in that space for a lender. Elton, size up the environment, the lending environment right now.
Yeah, I think it's interesting. The environment itself, and I'll say it this way, great ideas are always followed by money, and if you've got a great team and a great idea, money is the most portable form of interest, so it's always out there and available. But we've seen a compression not just on the lending environment or on the investment environment, but on the speed of follow-on funding for early-stage companies, and that's shrinking. It's a very, very interesting point that's in the market where it used to be you could get follow-on funding that carry you for 12 or 18 months, and now the rounds are happening much, much, much faster, which is going to have some ripple effects in the market.
Okay. So if we're coming to folks like you, no, I'm going to stop that. I'm not the entrepreneur. Give me a question.
I have a question.
Yeah, but you need the microphone. We want to make sure we capture it on video. That's why we want to use the microphone.
So Elton, I have several different companies that are within my parent company that are like 26-year-old gaming and really cool stuff. These guys want to crowdfund, and then they want to immediately go to angel, and they want to go up the ladder. And I looked at the laws recently, and they say that there's a window of time per state, and that the SEC is taking a look at this now. And I want to know what you guys are doing, because you can't raise crowdfunding and then not raise angel funding unless you have raised a significant amount of crowdfunding. And then you're locked into this law, and it could be up to 2 years before you are qualified again to raise angel funding. So how do you respond to that?
Just to step back and clarify what she's talking about real quick, and this has been going on for a period of time, but really over the past 24 months, the Jobs Act has allowed for this gray area, which is really happening in crowdfunding. And crowdfunding, as we know it, is things like Kickstarter, and you get a T-shirt for $5, right? There's the other side of it, which we're talking about, which is crowd equity investing. And you've got to be, right now, the way that the law reads, is an accredited investor, and you've still got to go through some different forms of the regulatory environment with the SEC to do placements, to actually announce that you're going to be funding. But guess what? The whole legal structure is very, very loose. And so there's this gray area where half of the legal advice that's out there says, go do it, you're fine. And then the other half says, nah, you should probably go through the process of putting together a private placement memorandum. You should probably go through the process of making sure that all your investors are accredited. You need to go through the same process as if you're going to go raise capital. You just now have an online tool to do it.
So the two states...
Wait, we have to know who you are
Oh.
and where you're from. Remember, this is being videoed.
Okay.
It will probably appear online, and this is a chance for free publicity.
Okay. My name is Amelia Forrester, and I work with Joe Rutledge, and he is written up in the Wall Street Journal as the most acclaimed and dynamic marketer of our time. And we put together over 1,000 pieces of television content that can be sold into the market space. And we also have a gaming and creation partner development in place. The company is called Atal Digital, and we're ready to pitch in 3 months. Um,
Well, and real quick, on your second part of the question, as it relates to how does that work in the overall capital stack and in a newly formed idea that's launching into a business, there's really 3 different phases of that idea, right? First phase is you've got an idea, and you can use some sort of market validation via crowdfunding that's just reward-based to test that. Once you take that idea and it turns into a project is something that you've got a team built around and or a product or a service that you're trying to sell. You can still use rewards-based crowdfunding to get working capital and additional market validation. And from there, the question becomes, what do you do next? And like you said, I mean, the percentages, and I don't know exact off the top of my head, but they're, I would bet, less than 5% of crowdfunding campaigns that are rewards-based don't need additional follow-on capital if they're trying to be a business. So you've still got to go and find additional financing sources. And a lot of this stuff over the next 48 months, I think is going to come to a head here domestically in the States. It already has elsewhere in the world. In the UK, it's been going on for years to do crowdfunding. The EU is trying to sort it out right now as well. But the US has a bit to do with pushing that forward. So I guess the short answer is yes, it's an option. Primarily right now, it's best used for market validation and early traction. And then if you take that to some of these folks that are doing follow-on rounds of funding, and you say, hey, guess what? I'm profitable as a company, and here's 100,000 people that have purchased my product. I need your money to scale. That's a way better conversation than walking in without that.
Last question. Do you think that with Virginia loosening their laws and having some of the best incentives in comparison to Silicon Valley, that they are the best place to set up a major, tech company today?
I think, and not a political answer, but an honest answer, I think there's a variety of different interest points depending on the industry or business that you're in as to where to set up. And the regulatory environment for that, for tech companies, for crowdfunding, for investments, crowdfunding specifically is going to be dictated by the SEC. And there's going to be some things that you can do at the state level, but it's going to be dictated by the SEC, and that's going to be the bottom line for it, because nobody's going to want that risk of white-collar crime or something that happens because they didn't do it appropriately.
How about the whole business model of crowdfunding itself?
How many people in here have crowdfunded anything, as in you've launched a campaign? How many people have contributed to a crowdfunding campaign? So that 2 years ago was completely different. There was one person in a room similar to this size that said, yeah, I've actually done a crowdfunding campaign, and there was like 2 that contributed. And so the industry itself is doubling year after year after year, and we were talking about this just prior. I mean, personal opinion is it's going to be the single most disruptive force in the way that we use financing to do things, or it's going to fail in the next decade's time. Personally, I think it's going to be the former of those 2 things, and the traction globally is showing that, especially when traditional financial vehicles and instruments and big banks are starting to look and go, hey, how do I think about this? So I think it's, we're on that curve, we're on the upswing, and what happens in the regulatory environment is really going to either accelerate it or stunt its growth, but it's not going to stop.
What's your crystal ball say?
I don't have one of those.
Okay. Any other questions for right now? Seriously, these are 3 money guys. Okay. Or yes. Hold on. Wait for the mic.
My name is Adam Messer, and I was in the last presentation when they were talking about the Fab Labs, and he was talking about the startup costs are $300,000. So it's a proven model. How would you go about if you wanted to come and bring something like that to? Caleb was talking about Jessup, which is outside of Savannah. It's a small rural area. How would you even approach the idea of creating a business model around that when the product is shown and proven to work, but how do you scale that to show that it would work in Jessup?
Right, like somebody may have come here today, seen that last presentation, and thought I got to have one of those. Right now, all of a sudden, Just thinking, how do we do
I
it?
mean, you want investment to make that happen?
All right, so the investor pitch. What's the investor pitch to get this going?
Membership already set up to show we have 100 members for this Fab Lab, and we don't have the Fab Lab.
It's no different than any other business. Who's the team? What's your business model? How are you going to execute it? What's the exit strategy? So remember, even a nonprofit business doesn't mean we don't make money. So it's no different than any other business.
I have a question because I saw these stats and I want to ask you about them. I saw something recently talking about funding your business. It said 62% of that money comes from personal income or assets, 18% from a bank loan, 17% from credit cards, 13% from friends and family. Is that typical? Does that sound typical for some of the folks that raised their hands before? No? What's different? Hold on, here comes the mic.
I think more young entrepreneurs and entrepreneurs today are finding strategic partners that are strategic investors that are in their niche space or that want some skin in the game early on, and that is a really good avenue to take. It helps with promoting the team. It helps with understanding all of the possibilities that are out there. If you have a guy that's taken 4 tech companies public and he's on your team and he believes in your product, there is a possibility where you are going to be perceived as not just, an entrepreneur with a big idea, but an entrepreneur with a big idea that has the momentum and the ability to execute. And those big players, I call them heavyweights, they bring in attention, and that access creates access, which creates access. And so I'm a firm believer. I think it's great for the Mark Zuckerbergs of the world and the young guys coming out of MIT and Harvard and all different colleges and things to come together. DigitalOcean is a good example. But I think it's pretty pivotal today to find somebody in your industry that has a niche understanding of how to bring capital into what you're doing.
Is there a particular industry right now that you're staying away from? I make widgets, for example. Is that bad? I have a software idea. Is that good?
I mean, there's niche markets in every industry. So to stay away from something as a stereotype, I think that would be very challenging. There's a lot of people that make a living predicting, and most of the time they predict incorrectly. So you've got, for example, people making billions of dollars actively managing funds, and really only 5% of them outperform an unintelligent index fund. So predicting what to stay out of is statistically proven wrong. So it really depends on a holistic view of it between what are the assets you have, meaning knowledge, resources, people, skills, talents, the community, energy. It's really it's dependent on where you are, the people you're networked with, your
Same
skill
thing.
sets.
Ralph, anything you stay away from completely?
No, I would answer it differently. I mean, everybody, I think most folks out there, and understand, I catch things typically a little bit further down the chain. But I mean, whether you have a product or a service, you're selling. You're selling something. So sales are fundamentally you're trying to solve some pain or disruption currently, or some pleasure in the future. Typically, pain in the present is the most salient of those, and what people can get their arms around. So, what big problem are you solving? Your business, one may be very capital intensive, one may not be so capital intensive. Depending on what investor you're approaching, they may have an appetite for something and not others. So I don't dismiss anything outright. I think that part of the key is understanding what your value proposition is, what pain are you trying to solve, and understanding who the investors are that are potentially interested in that, and focusing on those. I think building relationships, strategic relationships with folks up front. I always encourage folks to talk to multiple investors, develop strategic relationships as they go on, often and early. It only helps them hone their process, their product, better and find out who it is, so they're not wasting their time focused on investors who
All right,
aren't interested in that particular avenue.
right. I have lots of questions, okay? It's my job, so, but I feel that they're better coming from you. Oh, way in the back, okay. Remind me too, I want to ask the $50,000 question, the literal one.
Hello, my name's Tom Thompson. I'm director of the Metropolitan Savannah. So this
Do it again,
is-
Tom, I'm sorry, do it again.
That's not coming through there. My name's Tom Thompson. I'm director of the Metropolitan Planning Commission, which is City County Planning Commission here in Savannah. So I'm a public sector guy, so I'm looking at it from that perspective. Chad Vanderveen from, I think he's from California, Future Structure magazine, talked about cities and infrastructure and the interrelationships of infrastructure in cities, and I asked him about, well, how do we pay for all that? And his answer was partially public-private partnerships. So what's your view of public-private partnership capital out there? We're talking probably typically 100 million and more type investments by private sector into a public sector thing. Is that something you all are involved in, and what's your view of it?
Maybe you need to dredge the Savannah River, for example.
Yeah, a mere, what, 800 million? Or
Public-private partnerships.
Well, I'm personally involved in a few in South Carolina where I live, more around education, because even though we talk about investing in education, one thing the legislation does every year is cut the budget for. So a lot of companies are more concerned about the pipeline of skilled workforce, from the folks on the factory floor to engineering scientists all the way up. And the great thing about being part of a capitalist society is that you're not dependent on the government to create a business model. So a lot of companies are taking it on their own, taking the initiative on their own to develop partnerships with education, for example, not just at the university level, but you see a lot at the technical colleges and even high schools. I'm on the board of a new project-based learning charter high school, public school. So we're seeing a lot of that where people are joining forces, private companies coming together with public institutions, stepping up to the plate, not just writing a check and getting a plaque on the wall, but really getting involved, rolling up their sleeves, putting their people to work in the public institutions, providing equipment, services, resources, so that way kids they're not just studying to get a grade on a test, but they're working on real world projects with people that they may want to be when they grow up, and it makes it a lot more real. So that's just one example. There's a multitude of other examples from economic development and healthcare and social work as well. Very, very similar.
All right, I have a follow-up question. Who's got, or a starter question rather? I have a question for you, or you were going to ask one?
I'm going to ask.
Okay.
Hi, my name is Lauren Wilkie. I'm a social work professor with the University of South Carolina. And so nonprofit fundraising, I've got a couple of issues. One is for diversity of funding, we have less funding coming from individuals, churches, businesses, because we think all government funding is covering that. We don't need to fund that anymore. But the reality is it's not. So the issue is, one, how do I smooch up to the business people to get them to fund when there's so much competition now out there?
Smooching. How do we better smooch?
Well, the aerospace company that I was running, we just exited that a few months ago, but we were involved in a lot of philanthropic needs, and probably every week, I'd say my voicemail box was filled up full of people asking for stuff, and they had bad pitches. So
Unprepared, bad detail, they were lousy speakers, or what
all the
was-
above. So why do you want to partner with me as the customer? What can I do beyond just writing a check? How can we add value? What problem are you solving?
Were they making the pitches in the voicemail?
That, and everybody is doing, everybody's deploying their request for money in a 1940s model.
Wow. A whole other lesson for that.
So what,
The pitches are terrible. Is that what you're
and
saying?
really the companies that you want,
You've got money to
funds.
give, but you're saying the pitches are lousy.
the pitches are lousy. And so the
Hold
best.
on, hold on. What's missing then? Is
What?
that coming from higher education? Right? I mean, that was a powerful statement somebody made in the last presentation that education's obsolete. Our education system's obsolete.
So there's a lot of studies around how people make decisions, and when you have too many choices, people make no decision versus few points to make a decision on. So most private industry gets an enormous amount of requests from emails, brochures, postcards, people just camping out in the lobby, et cetera. But what are you doing that's unique? How do you stand out? What unique problem are you solving that's different than everybody else? And more importantly, how can we as a company be involved and add value? Because if you look at what's happening in the corporate social sustainability movement, where it's not just about employee volunteerism, but it's about employee engagement and your company as a vehicle to do good in the world. And there's a war on talent out there. So really the best companies can't just think about making profits anymore. We have to find ways to use our company as a vehicle to do good stuff. And the very best people, the brightest people who can make the biggest difference for your company, want meaningful work. If you show me how I can use you, your charity, your initiative as a vehicle to get my employees engaged and check the box on meaningful work to where when they wake up in the morning, they are jazzed about, hey, we're not just doing cool stuff and I'm making parts that go on the International Space Station, but we are making a difference in the world while we're working, we write checks.
That's a fantastic answer, and I might add to that. And whether you're a nonprofit and you're trying to solicit investment from a for-profit enterprise, or whether you're an entrepreneur seeking money, again, it's critical that I think you need to put yourself in their shoes. You need to approach them not as a charitable organization. You need to approach them. The burden of proof is on you to articulate to them why them making an investment or a contribution in your organization is going to benefit them. They're entrepreneurs in many sense, just like you're an entrepreneur. If they're a fund, they are an entrepreneurs. They have LPs and investors they have to answer to. They raised money from somebody so that they can put money into you. So their thought process in that sense isn't all that different. So again, just remember, that is a sales pitch like any other sales pitch, and the burden of proof, again, is on you to have to articulate why that's worth their while.
You might need a partner then for that. No, I mean, if we're making lousy pitches in general.
Not in general, majority.
Okay. If the majority of the time we're making lousy pitches, then some of these folks are not, pitching is not their strength. They're idea people, they're the makers of this stuff, right? You gotta go find that partner. Or is there a one-stop place online where I can fill out a sheet rather than your application at your lending institution that says, here's how to pitch. Here's a 2-page thing you should fill out or be prepared to discuss, right, in that instance. Or find somebody who's a good communicator, who can do that for you, no? Is that would that help?
We have this broad problem that's a pitch epidemic. I mean, it's just this massive issue, and there's all this.
I can go back. Where's it coming from? So you've clearly identified this. Pitching is a problem.
But it's not new. It's always been that way, and there's this perception that.
Right. What do you want?
But guess what? Storytelling's the same, whether it's $1 or 100 million, right? The components of that story are different, but storytelling is the absolute same. And But,
All right.
sure. Okay.
So how
let
do
me
we
jump
know?
there.
Here we go. How do we know that, for example, you're not just saying pitching is bad as an excuse to not lend the money because you've been told not to?
Sure. When you break it down, and we we obviously with OneSpark, and I've done some other ventures where we actually make investment decisions as well, so I have that experience, but less than these folks do. But what I've learned on the other side in going and actually raising capital and doing that successfully for big business as well, and from lending institutions as well as from angel rounds and friends and family and crowdfunding, is very simple. The story of what you're doing and the why behind it is the most important thing that's there from my perspective.
Not return on investment.
Number one is why you're doing it, from my perspective. The second piece of that puzzle is how are you actually going to execute that thing, whatever that thing is. And so that breeds into the team of people that you have, the expertise that you have, the experience. And then from there, cool, great. What the heck have you actually done? So do you have any sort of traction? Have you brought this thing forward? Are you actually doing anything? Or are you just saying, hey, I got this great idea, and here's how I'm going to go do it, but I need your money before I can do anything? And the last piece of that is, here's exactly what I need in sources of funds, where it's coming from, and the uses that it's going for. If you break down those four things, and I turn it over to them, but my experience has been, as long as that works and you've done those things really well, then you're going to at least get interest. You may not get the right investor, and raising money is not, it seems sexy, but it's just a pain in the butt. Like,
Right.
It's really hard work to find the right partner, but you got to keep doing those four things. So that's how I break it down.
That's a good drill down, because I think and just follow up with me 1 second, but your initial thing was, why are you doing it? Don't get me wrong, but one, I have a great idea, I love it, and three, I want to make money. That's fairly standard, right? Give me the nuts and bolts, as you said. Where's that money going to go? I want $50,000. Where's it going to go? I did 10 grand to hire a part-timer for 2 years, right? Is that what you're saying?
Yeah, and the last piece of that as a founder, and this was a great lesson for me even recently, was as a founder at a table with investors and a board, guess what? You're the one that's there that should know the most about the industry and have the most passion. If you don't have those two things, why am I going to invest in you? Because I can go find somebody else that can, and I've got that money and the resources to bring something to life.
So of all the pitches that were done last night, only one company asked for money, and that was the company that got invested in. And all the other pitches had no financial whatsoever. And I'm sitting here, and I'm looking at the audience, and I'm thinking to myself, where is the angel investor on this panel? Because so I want to hear about how you guys connect the dots from crowdfunding to angel and to the private equity to the 23 million to whatever is needed, because we as founders and entrepreneurs need to see you guys more connected between the voids that are out there. Because we go through a year of looking for the right crowdfunding people. We go through a year of looking for the right angel investor. Then we get the company to where, and then we go through the VC, and we go through the VC nightmare. Talk to us about how we can connect the dots.
We're on borrowed time, so let's be efficient.
So I am an angel investor. I put money at risk every day. So this will sound kind of harsh, but you need to hear it. There's a lot of money out there, more than you can ever spend. You do a bad job pitching. So for example, Atho, they were the only one last night that actually had an ask, that actually had a roadmap that showed execution steps. Over the last 90 days, I've met with 49 inventors and entrepreneurs from Georgia, South Carolina, North Carolina, and northern Florida. Atho was number 3, so I've had 3 out of those 49 in their pitch have any kind of roadmap or financial execution. You just heard literally the ingredients of a slide deck. I've had 3 do what you just heard. 3.
That's a 6% success ratio if my math is right.
And I invested in 2 of those companies. So most of your pitches are horrible. They talk about market, how awesome the market is, and if I can just get 0.5%, that's all the money we need. No information about how you're going to execute it. No real information about why, who the team is, and how the team brings the right skill sets to the table for the ingredients needed to bake that cake, and then how you bake the cake. How does that team actually do the work, and then what are your financials? So out of those 49 companies, usually I ask this is a one consistent question I ask: how much money do you need, and how long will that last you based on your current roadmap, your current execution strategy? I get everything from to I don't know to I haven't thought about that yet to I'll figure that out. So you have no idea how much money you need. You have no idea how long that's going to take. Most of the time, people have very unrealistic plans. They think they're going to make a lunar landing on their first attempt.
How do these people want to get FaceTime with you in the first place? How do they get in front of your desk if they don't have this plan?
They don't get in front of my desk.
Okay. You've seen this, what, by email or voicemail you're talking about?
Well, no, that's the ones that made it past email. So most of those are 10-minute discussions. If you can't get your pitch across in 10 minutes, then forget it.
Go ahead. You got the mic.
Yep. So, adding to this story, I think
Name and where you're from.
My name is Prateek Jain, PJ I go by. We started a company called Plexer in Savannah, and I also work for Gulfstream, designing airplanes full time. So, I think the story is current education systems don't contribute to your communication skills, right? Period. People don't know how to speak. People don't know how to write. People don't know how to people don't know how to pitch, even to their wives, right?
Great point.
So we're losing in all fronts on that front. But the second question is, I think we miss out on the idea of you're not pitching because you need something. You're building a relationship because, hey, this could be mutually beneficial, right? So what I'm wondering is, as I go, I'm not trying to ask you for something. I'm not trying to ask for something every time I meet you or meet other people. I'm actually trying to get to know you, trying to build a relationship. If I can help you, I'd love to help you. And there are resources and talents that I have and information that I have that you would find very useful. So what I'm trying to understand is how do we sort of, for example, this event is a great place for me. I've met some fantastic people. I'm hoping you've met some great people. But how do we find more time to connect with people like you or people like you guys? Why don't you organize more Geekends, B? So
I'm actually going to
Is it just one spark
Well, they need funding,
and Geekend? Or can we put some more events together? Can we have some more of this vibrant ecosystem going?
That's a great point, because there always has been, right? And I think I'll use lobbying, for example, Washington lobbying, for example. There's never, you got Small Business Administration, I understand that, but there's never been a cohesive group that has organized the small business owner and has put a baseball bat in their hands to get somebody's attention, right? It's always a one-man fight all the time, right? Yes, your neighbor, you belong to the Rotary or to the local Chamber of Commerce, and the two of you, man, you think alike, right? And we got to get stuff done. But there's never this big connector, right? I think that's kind of what you were saying.
So just to finish that question, for example, I do all kinds of events like this too. I do TEDx at colleges, and I do Toastmasters every week. So we try to put these events to teach people communication skills and things like that. But the question is, how do we attract interest in the heavyweights, like you quoted them, to come and participate? I think one idea is, like you said, train the pitcher so that they don't waste their time. But how do we get your attention to come participate and engage with the local entrepreneurs as well as us when we're trying to go do something big?
Ask? Is it as easy as just asking?
I'm going to jump in as someone who's failed at a lot of pitches, back to your original question. And I think the summary in this room for me is not everybody is your cousin. And so as Gordy might come, but what I've had to learn in my failed pitches is the L word we haven't talked about, and that's listen. And when we have been successful in the pitch, it's when we've listened to whoever we're at. We run a nonprofit. And
you as the pitcher?
Yeah, as the pitcher. I have flunked more times than I can write down in the pitch. I've been this failure. And you flunk when you don't get what you want. You know you flunked when you asked for the check and it didn't come, or you asked for them to come to speak and they didn't come. But my experience is if you take a moment to listen as to what Jason was saying, what do they need out of it? What is the value proposition? But the real question is, what is the value proposition you're seeking? What kind of exposure are you seeking? What kind of involvement do you want? What kind of time do you have? And that's all. My 2 cents would be when we've been able to listen to what people need, then we're able to engage them in Geekend or in the Creative Coast or whatever.
So you have to, what I call it an asset inventory. So you need to look at who the audience is. So most angel investors don't advertise too much. There are more public forums for sure, and even angel clubs and associations. But to listen and find out who that, if it's an individual or if it's a group, what the demographic is, what do they invest in, what do they know, what do they want to invest in, why do they want to invest. For example, you've got a pretty neat software product, but I'm a mechanical engineer, right? So I'm a nuts and bolts kind of guy, right? Exactly, you didn't, because you knew, you took the time to learn about what my sweet spot is. I don't know anything about software, but except unless it's attached to some physical component that makes it work. I'm a nuts and bolts kind of guy. So he didn't pitch me because he listened, and it's okay, right? But indirectly, I may know somebody that is a software guru that likes to invest, and now I met somebody really sharp who's got a professional background as well. So it's those indirect relationships as well. Don't always think about scoring on the first pass. Make a first down, and make a lot of indirect connections. There's a great book that you should buy. It's an actual older one. It's Jeffrey Gitomer, I think, The Little Red Book of Selling, and then I think it's got The Little Black Book of Relationships. It's all about how to network and how to build those second and third degree relationships. I rarely even meet with a stranger. It's all about a referral.
You attend, for example, a Toastmaster meeting if you were invited? Or you?
I mean, I do now. We all have finite amount of time, but if you can word it to not, hey, this just come to a Toastmaster and have a free lunch, probably not so interesting. But you can say, hey, here's the group. This is what we're about. This is kind of what we're doing. If you take the time to learn about me and what I'm interested in, I may come just for the potential to make relationships. I came to the Startup Lounge, was it 6 weeks ago, B? And knowing that it's majority software, and I'm a nuts and bolts gearhead kind of guy, but I came just for the networking potential, And I had no plans of making any investments, but I am.
I have a quick question. Are we done with time? I know we're 11:45. Okay.
Hi, my name's Caleb Mock. I'll stand up. I'm actually a project engineer at Rainier. I'm also a mechanical engineer, so some of this software stuff is way over my head. I just want to say it seems like a lot of your pitches almost need to be in a similar type of situation as a good job search. It's like, what can I offer you as an employer? Would you say that that's an apt type of comparison?
Absolutely.
It's like
So as an employer, I've probably personally hired 2,000 people in the course of my career, and indirectly, more than that. The amount of resume noise there is, it's almost overwhelming. Everybody is selling 100% of the time. So that's a very good analogy. How do you make your resume stand out? Do you just mail it in? Do you use a network and reference? can you find 4 ways into that organization? So now instead of just going through the HR and hoping somebody opens up a letter and passes it on to the hiring manager, are you getting into that organization 4 different ways? It's very similar to the competitive landscape in getting a job. That's an excellent analogy.
That's a radio headline for me right there. Find 4 ways to get into that organization. That's a great one. Great one.
You are very welcome.
I like it. I like it. So let me ask this question. What would you do with $50,000 right now? And I'll give multiple choice, and if it's not one, then say it. Pay debt, hire, or market?
I would prototype. I definitely would. I have more ideas floating around in my head than I even know where to start. Right now, I probably would try to go and work on creating a fab lab in Jessup, Georgia, but that's just based on the conversation earlier today. But honestly, there'd be a good deal of consideration as to what project's worth pursuing.
Okay.
Not pay down debt first. I have a good interest rate.
Hey, thank you guys for doing this today. Problem with my company is we sell out of inventory.
What company?
Bauer Bags, I pitched last night. Part of the format and part of the rules, we're asked to not do a formal ask. And if any 3 of you guys are interested in talking more, I'd love to talk more with you. I just wanted to respect the rules of the format. But we have a very viable, very fundable, very profitable business plan all in place. So I'll follow on with you after. But I want to let you know that. And to answer your question, what's that? Fair enough, fair enough. If you know anybody that is, or in your network, that would be awesome.
Hi, my name is Micah Wiedemeyer, and I'm a Ruby on Rails software development consultant. So not asking you guys for money, but if any of you guys want to hire me. So one question I have that I think would probably be a big thing for a lot of like brand new people is you're getting any kind of money you can, like the friends and family kind of like, let me get $20,000 here, $30,000 there. What are some like do not make this mistake kind of steps that people will take? Well, they'll come to you and they're like, all right, I've got past this level, I've prototyped all this, I've got 2 employees, and we've got enough money to get us for the next 2 months. Now I need to raise some like angel money from somebody, people I don't necessarily know. And then they come in and they say, Uncle Joe owns 12% of the company, and Aunt Sue owns 6% of future profits, kind of stuff.
Right.
Like
Royalties, all that other stuff.
We laugh, but that's how people get money.
How it gets going sometimes.
If once your credit cards are maxed out, it's time to go to Uncle Joe.
Yep.
So.
All right, biggest mistakes. Ralph, start with this. Okay.
So I have actually turned down opportunities like that because we call it hair on the deal. There's just too much unknown risks involved. So.
What's the phrase? Don't grow hair on the deal? Don't put hair on the deal?
So everybody talks about the access to capital as being the biggest challenge. It's really the access to mentorship. The decisions that you make in the formative days and months of your company can wreck all the years in the future. So before you raise money, raise mentors. You think of you as a company. Do you have a board of directors for you incorporated? Do you only have people that pat you on the back and tell you how great you are? Do you have people that can help guide you? All you got to do is ask. Go to your alma mater. Go to the city. Go to the economic development folks. Go to the Rotary Club. Tell people what you want to do and get some input. Yeah. So before you take the first dollar, before you advance the first percentage on your credit card, do you have mentors in place? Have you talked to anybody? Are you trying to do it all by yourself? Get mentors first. And most of the time, if you do a really good job of networking and talking to mentors, one of those mentors will say, hey, I'd like to help you.
We're looking for Ruby folks, so we should talk. One other thing just to add to that, I had a great mentor and really close friend tell me, because I had the same question years ago. I said, what am I doing? What should I not be doing? And he said, don't take or put $1 into your thing until you know what you're doing with that thing. That was it. And that was the simple kind of advice. And I was like, well, what do you mean about thing? Can you describe that? He's like, no, I can't, because it's whatever your company, project, thing is going to be.
It's the roadmap. It's the execution plan.
It's all of that, right? Or it may just be what you need to get to the next step. And then the follow-on from that he said was, okay, once you have a thing that's going to be a company, don't take money until you know the money that you're going to take is going to grow that company. And that was it. So those are the 2 steps that I've lived by, and that was probably 8 years ago, and it's been very successful just taking those 2 before asking for any capital.
And I'm going to recap. Are we done? Here's my recap as a note taker and host of a small business podcast. And I'm going to include this next week when I do it. Here are the 5 takeaways from the investor conference at Geekend in Savannah. Number 1, there's more money available than you could ever spend. Number 2, the pitching problem is an epidemic. Number 3, find 4 ways into an organization. Don't put hair on it. Get a mentor. Right? I think that's it. Good stuff. Nice meeting you guys. Thank you
Elton,
very much.
Jason, Ralph, Gordon, thank you very much. Thank you for being a part.